Hi everyone. Today I want to go over how I backtest my strategies in ThinkOrSwim OnDemand. So the first thing I do right away when I backtest is look at a stock on a monthly chart. And for this example, we will look at Apple. And I always look for a stock that has a good uptrend, like Apple, right? You can look at other stocks like NVDA, um, maybe a stock like Amazon, right, that have good long-term uptrends. Um, Also, like a good rule of thumb is to look at stocks that are in the highest market cap. So a lot of these stocks that have market caps, maybe like the top 30 stocks, usually have a decent uptrend historically. So once you select a stock, like Apple, for this case, the next step I do is I go into ThinkOrSwim OnDemand. So if you're in your ThinkOrSwim application, you just click OnDemand, and it brings you into a simulated account. So then I'm going to type in Apple, and to go over my strategy, what were the rules? So like the first rule is we enter long call. We enter a long call, 45 days till expiration, and at the 0.45 delta. Okay. So we enter a long call, 45 DTE, 45 delta, on the last day of month. Okay. And then second step is we hold option through month, and then we sell for gain / loss, right? So, and then we repeat, right? And then we roll that into the next month, right? So those are the main steps, the core steps to my strategy, right? So when I'm back testing, let's say I want to back test for 2023 for Apple, I'm going to go to, well, we'll start on January 31st, right? Or January 30th in this case. And I like to enter on the like last 10 minutes of the day. Okay, so we're going to go to December 30th, 2022 to enter our first trade. And you'll see on the top left, it's going to say buffering. And now, now we're showing data for December 30th. So we're going to go to that DTA that's closest. I usually stay away from the weekly options. I'll just go with the closest option to 45 days. I just got to reshift that. All right. So right away, I'm going to be buying this call option right here, right? It's 0.42 for about 500 bucks. And then I would risk, in this case, we would be risking 25% of our account. That would be 25,000. So you do 25,000 divided by 495, which is the price that we're paying for. So we have to buy 50 contracts. And I always round down, right? So I don't, if this is 50.5, I won't round up, I'll round down. So we're just going to do 50 contracts. So there you go. Enter that. You hear the chime. We entered. And then we can go to the next month. I just click this arrow here. So now we're in January 2023, 31st, last 10 minutes of the day. We'll go to that day now. And I'm pretty sure this was a positive month. And you could see for this trade, we made a 108% gain, give or take. Right, so our contract, we bought it for $4.95, although the fill price we got was $3.90 or $4.93, so 2 cents off, which is like a $10 difference, no big deal. And our option currently is, let me expand that. So our position is right here, selling for $9.95 right now, so $10. So we made about 100% gain on this trade. So I'd close the order, and there you go. So we sold that for 10.40, which is kind of a little off from what the actual price is. So it's off by like 20 cents, or like 40 cents. So yeah, that's it. And then now our account's at $127,000. And I just do the same thing over and over and over again for each month until I get to December. And then what I'll do after that is I will plug it into the Excel sheet. What I'll do is I'll copy each trade from here. I'll sort it by the time, right? So my entry, my sell for the month of January, and then so on. And then I can just put in the data, basically just looking at the price differences for each option contract to get the profit and loss. And then I could just put in whatever figure I want on the Excel sheet, right? If I want to start with a $25,000 account or $10,000 account, right? And that's how I do it. But that's my main strategy and how I backtest it. And I like to stick with stocks that are established and that have growth and expect to grow. Of course, I can go with like a smaller cap name. Let's say like ON Semiconductor, this stock. This is much more risky, right? Yeah, but the gains are great. You can make a lot of money, but they're not as consistent, and it's a lot more volatility. So if I were going to trade something like this, I would obviously risk a lot less of my account. But like a stock like Apple, I'd feel more comfortable risking more because I know Apple's an established company that has a proven track record. Even though past performance does not predict what's going to happen next, right? Apple stock can dump 50% for all we know next week for any assortment of reasons. But I know that Apple has a good track record, and I can trust putting on a trade for this stock. And of course, if it doesn't work out, I can always change to a different stock, right? I could try out like an exchange like TQQQ, maybe like Amazon or Google, right? So I won't limit myself, and I'll backtest this strategy in OnDemand TUS for different stocks. So yeah, that's pretty much it. I wanted to show you guys how I went about my backtesting. And yeah, I hope you enjoyed, and thanks for watching. Bye.